will Wolfspeed stock recover? So we know very well that the stock lost almost 70% on Wednesday, the 21st of May. And by the next by that same trading session, it began to even recover by the beginning of Friday's trading session. As a matter of fact, it was still holding gains of around more than 70% from those lows of around 0.9395 or thereabouts. But in the regular session of yesterday, the 23rd, that's Friday, it's lost some of those gains. That somewhat lost some of those recovered gains. So ultimately, from those lows, from its 52-week low, I want to believe it has recovered more than or close to 50%. So all of this began when Wall Street Journal disclosed that, or rather reported that the company may be filing a prepackaged Chapter 11 plan, and also known as a pre-pack. It involves reaching an agreement with creditors and stockholders before a bankruptcy filing, detailing key aspects of the bankruptcy plan. The plan, along with a disclosure statement, is typically filed when the Chapter 11 case begins, streamlining the bankruptcy process and minimizing business disruption. We know one company that has done that, that did such a thing of not very long ago, around 5 years ago, was Kavanaugh. You know, the company did the same thing, and yeah, did the same thing, and the stock has since gone from it went from $30 split adjusted to $300 where it is today. Yeah, so it is a plan that the company is attempting to pursue. So the folks at Motley Fool had some stuff to say there. Says, yeah, it's one company that did such a thing, and it seems Wolfspeed is also taking out trying to do the same thing as well. So this is some piece about what really went wrong with Wolfspeed. It says, if you didn't know already, the company designs and manufactures semiconductors based on silicon carbide and gallium nitride, which are used in power and radio frequency applications, respectively. The company is vertically integrated, also producing the underlying silicon carbide and gallium nitride materials used in these components. It was originally a part of LED lighting company Cree. So vertically integrated means that it owns maybe virtually everything in its supply chain, which can be good. But you can also imagine that it will come at a huge cost. So Wolfspeed's main focus has been on its silicon carbide business. Silicon carbide has superior thermal conductivity and greater energy efficiency than traditional silicon, which allows silicon carbide components to perform better at higher temperatures. It's particularly beneficial for use in EVs and helps extend their driving range. So, seeing growth and with projections of robust EV growth ahead, Wolfspeed went all in on silicon carbide, looking to rapidly expand its business. This included building a colossal silicon carbide materials plant in North Carolina and a large fab or fabrication facility in New York. And this is according to them where it all began to fall apart, and we know what has been going on. So the facility in North Carolina was meant to supply Wolfspeed with its bulk of its silicon carbide material and wafers. However, the project encountered delays and is still not fully operational, while the startup cost has stressed its balance sheet. Silicon carbide is grown from crystals, and wafer production is complex, which has led to challenges. At the same time, its Mohawk Valley fab in New York has had weak utilization. So at the same time as well, the company has faced increased competition from cheaper Chinese manufacturers such as Seekco and Epic World. While it has many benefits, silicon carbide is more expensive than traditional silicon, and EV customers can be price sensitive as a result of all of this. Meanwhile, EV demand, while still growing, has slowed. This has led several vehicle manufacturers to delay product launches, and it goes on there. So yeah, it's an uphill task that the stock is facing and the company is facing, but they know the news of bankruptcy or pre-pack plans. I mean, I've seen you've seen that a one clear case Kavanaugh. I've not been able to pick up their stock symbol to have a look at the stock. So yeah, they know some investors know that it has some promise. It has some promise to it, and also because now the stock is now trading at a huge discount. At a huge discount, and when things get better, it could do well. So it is a sort of stock that may be in the very short term not very good. If you're looking for short term gains, it may not be good for you to get involved right now. But in the long run, pension funds could take advantage of the opportunity that has arisen now to maybe begin to get involved to buy cheap now, because it's the prospect of it doing well may pan out. The prospect of it doing well may turn out to be the case. So as of last year, it was trading at around $27. So this is more than 10 times less than what it was then. So there might be opportunity in the future, but not anytime soon. So in terms of extrapolations, we have lower prices being extrapolated, nothing to the upside at all on this daily chart. In terms of projections, what do we have? We have nothing. 0.185 is we have downward projections on this 4-hour chart. Not very long ago, just I think yeah, just before the news broke, there were a couple of upper projections. 5.87, 6.9 to 7.56. On the daily chart. Yeah, let's have a look at its weekly chart. On its weekly chart as well, lower prices are extrapolated, nothing to the upside. In terms of projections, nothing as well. Really low prices are being extrapolated for on its weekly chart. In a very short term, yeah, we still have on the 4-hour chart there are extrapolations to the upside. For those who are brave enough, we have 1.65, 1.97, 2.17. So yeah, lower prices are still extrapolated here as well. But never say never. They could still this stock is now being watched by all sorts of institutions. We don't who knows what's going to happen. There's no guarantee that yeah, it's going to recover, but it's being watched right now. It's being watched. One of the companies that is their creditors is Apollo Global Management. So it's currently negotiating with Apollo Global Management to restructure its debt. In particular, it needs to restructure its convertible notes to be able to access the $750 million indirect funding from the CHIPS Act. Why this could be done out of court, it looks like management may prefer to do it as part of a pre-packed bankruptcy filing. So yeah, so if this news comes out, if they're able to do this restructuring and all that, who knows what's going to happen. But yeah, watching the fact that it actually rebounded somewhat is an indication that indeed you never know something. I mean, not don't rule out anything. Don't rule out anything. But if it becomes a meme stock, if it becomes popular like GME and AMC were in the pandemic days, then it's good. It may be good for the company. It may be good for them for the company in terms of raising funding, um, but it may not be that good for passive investors at all. It may not be good for long-term investors. It may not really be good for them. They have to be as active as possible and as watchful as possible and as strategic as possible to benefit from any swings and all that. So let's even try and see whether we can find what the short interest is saying. Let's see what the short interest is saying. Let's see. Yeah, 3.53%. So this is also an attraction as well. This is also an attraction. Yeah, yeah, this is also an attraction. So um, we'll see. We'll see what's going to happen. We'll see what's going to happen. Yeah. So uh, yeah. So thank you very much for watching this video.